Hi guys, how you doing? This is the lesson one, and this is the second quarter of the class. So we are heading for another 25% of this of content of this class. And this one, we're gonna get into some real technical analysis subject. We're gonna start drawing. Actually, we did go over a lot of information, but we're gonna start drawing finally. So this class, this is the first lesson. I'm gonna start without a code, I guess. Is there a code for this one? Yeah, I know we don't have a code, so go ahead and read the disclaimer. If there is something you're not happy with, that you can just go ahead and stop the video. It's okay. Let's go and start, because we're gonna talk about support and resistances now. These are probably one of the simplest, I can say, technical analysis figure pattern. There's a lot of people that are familiar with them, but let's go ahead and talk about them now. In this lesson, I'm gonna teach you how to place them properly. You will never make mistake anymore when placing your support and resistances. We're gonna go ahead and talk about them, but we're not gonna talk about the psychological part of it. So I'm gonna let the psychological part of support and resistances for very simple another lesson, but we're gonna keep it simple here. I'm just gonna teach you how to place them properly. Now, support and resistances. A support zone is a concentration of demand. A resistance zone is a concentration of supply. Now, extremely important, they are not buy and sell signals. You cannot go ahead and use a support to buy or resistance to short. Actually, they are more useful to anticipate reversal. So if we are getting close to a resistance, let's go, should I draw one? Before that, let's just go ahead and I'm gonna use the whiteboard, and then let's go ahead and do some kind of illustration first. Now, you know, at the market we can have a bull trend, and then we have sideways. I'm gonna put so we can have sideways, just put side, there's too much text now, and a bear market, bear trend. Now what happened is, there is a bunch of, when the market is going up, the market has to face a bunch of lines or zone. It's better to consider them as zones than lines. Okay, now in the way up, the market face the zones of or line of resistance. These are, for an example, this resistance is the concentration of the concentrations of supply. Okay, now here there is too much supply, so even though I use the green color to place this line, this is psychologically, this is a red line here. Okay, this is a line. You're gonna use a green color to place it, certainly, but because it's in an uptrend, this is a resistance, and here there is a huge load of supply. Literally mean that there's a lot of selling orders in this zone. Now, it's very important from a swing trading perspective to know this is not a buying or a selling signal, because the market can literally go ahead and not react to a well-known resistance. Okay, that's the first thing you need to know. Now, this supply, if the buyers, they are increasing their bids in uptrend, so their bids are going higher and higher and higher, and because of that, the price is going higher. Okay, higher and higher and higher. Now, once we made it to that zone of resistance, there is a huge load of supply. Two things can happen, and only two things can happen here. The supply must be enough to satisfy all the bulls. In this situation, the resistance will react. If the bulls have more bids than the supply, then will certainly violate it and blow up this resistance. At that moment, this huge of supply will turn into a concentration of demand. And at that moment, once you blow it off, on the way down, this is a support. That's what they say when a resistance turns into a support when it gets violated. So in the way up, we must face another resistance, touch it 2 times, and same movement. Or here, can literally go through it without reaction. So the reaction that we have on a resistance on the way up really depends on how many supply there is on the resistance. Once it violated, the supply have been totally used. We only have demand left, and then it turns into a support. Now, same thing for the bear market. In a bear market, generally the price keep going down and down and down. Now, what you can have is a situation in which price is going down. Maybe this is a well-known support. This is a zone of clear demand. Okay, so touch it and react, touch it and react, and go through it. At that moment, all the demand have been satisfied. Now there's only oh man, I'm using the wrong color here. All the demand have been satisfied, so there's only supply here. I did use the wrong color here. So once it get violated, this support is now a resistance on the way up. This is a concept we're gonna have to go through many examples. Now, in going down, this might be a well-known support in the market. When you go through it, maybe you will violate it without reaction. This only means that at that very moment, the demand here, the concentration of demand was not enough to react to the ask from the bears, and then market keep dropping. Or maybe here we touch that well-known support line, react to it a second times, and then we go back up. At that moment, this line previously was in the first move it was a support. When it got violated, it becomes a resistance, which is a zone of supply. If there is way more supply than demand in the way up, because in the way up the rally is being ruled by the bulls, if ever there is way more supply and then all the demand from the bulls have been satisfied, we're gonna have a move back and maybe retest it, now when it comes to a sideways market, the market generally is being traded on a range. This can stay for a very long period of time here. Okay, so generally, like I told you, scalpers, they really enjoy this moment in the market. But generally, we are being traded between a support and a resistance. When it get violated, this might be some kind of signification based on what type of trading strategy you're using. Now, when it comes to support and resistance, there is some principle that you need to understand. And I will already talk about the fact that they cannot be considered as buy and sell, but they must be anticipated reversal. Only thing you need to know is that the older they are, the stronger they are. So the market has memory. Remember some very specific zone, and really depends on what kind of trend we are. They might be considered as support and or resistance. Now, the bigger the time frame, the stronger they are, and there's two types of support and resistance. Some of them are dynamics and some of them are statics. Now we're gonna essentially talk about static support resistance, and then in the part 2 we're gonna have to go through it to the dynamic type of support and resistance, in which we're gonna have to find using some technical analysis tool or indicators. Okay, let's go in the chart, and then we're gonna go ahead and start. I'm gonna show you how to place them properly. Now, this is a Bitcoin US dollar. This is a daily time frame chart, and then we're gonna start by placing support and resistance since 2012. Now, the first thing you need to know is when it comes to support and resistance, you're gonna double click on the chart, and then you're gonna remove the wicks. Okay, wicks cannot be part of support and resistances. They cannot be part of trend lines. This is very important. Okay, so we're gonna use this tool right there. Remember, 1 day, and the color for this is green. Here is the body. This is the top of this particular swing. Okay, and then we're gonna keep going. Now, this can be considered as a zone of support. When the market violated, it was a resistance over here. We drop. When we touch this, we had a reversal. Remember, I told you these are not indication to sell or buy, because they get violated so often. Particularly beginners, they tend to hold to this kind of losses. People fail to believe that this can be considered as way to enter trade. That's not a good way to use them. So remember, we're not using wicks on them. Not using wicks. I remove them just for the purpose of teaching, but you must let the wicks. But as of now, let's just start by placing them without wicks to see what happened. Now, we had this first, that was a resistance. Then when we go through it, it's supposed to be a support. That's how you place a support or a resistance in the market. So it's the same tool that we use, but the name of support or resistance really depends on what kind of trend are we dealing with. Okay, second slide. You need to think of support as temporary floor for prices, and resistances as ceiling. What I'm trying to explain, I just show you how to place one of them. We're gonna make many example, but as of now, let's go ahead and then I'll show you. You need to picture this as some kind of building. It's like a building. Okay, you got a building here, And then in the middle you got different floor. Like this, and that's it. And then you are here. Okay, this is Tom, this is Mary, this is Mike, this right there is I don't know, Ashley, and this right there is I don't know. Now what you need to understand is this represent this line right there represent the ceiling for him. Okay, that's her ceiling. But for Ashley, this is a floor. Okay, and here that's her ceiling. And what is ceiling for Ashley is actually the floor for Mike. And then same thing over and over and over. Now if Tom take the stairs and go over here, what used to be the floor for Tom turn into the ceiling. So they're gonna share the same information. They're gonna look at the same zone, but for that used to be ceiling for Mary and used to be floor for Tom. When he go down, this he gonna consider this as the ceiling. And same thing if we keep going down using the stairs. Okay, or better, what if Mike decide to go upstairs? If he goes upstairs, what used to be the ceiling for him turn into the floor. And this is the exact same thing when you have an uptrend or a downtrend. The exact same thing. That's exactly how you should consider support and resistances. Now some other principle, support reverse into resistance on the way up. We talk about that. And resistance reverse into support on the way down. Okay, now how do we identify them? Okay, now in the chart I did place one of them, but I didn't show you how did we do it exactly. Now one of the way you can use to place a support and resistance, we're gonna use the horizontal line. We're gonna start placing them using, for an example, previous highs and previous lows. Now we can go ahead, we're gonna go back on this chart, and then this was a good one. We place it here. We did go over it. This is a sign. It was a reversal here. It got violated here. Good. Let's go here and then. And now, if you're watching this video by now, I'm sure that you wish you have Bitcoin for $13. This is probably the kind of thing you will never see again. So this is a previous high. It's probably a resistance. So next time we are getting closer to this zone, and this might be a situation in which we're gonna have a reversal. This is not a green light to short the market. No, that's not one. You don't short that because the market shows signs of resistance here. We can expect reversal here. So if you did, if your trend study told you that this is a bull market, maybe you can reduce your position or close your longs, but that's not an indication or green light to short the market. Now remember, we eventually swing somewhere here previous swing. Look, previous low. This one could have been used as a swing low, but more this one also. These are support zone. You could have identified them as support zone. This right there, but I'm gonna put it. I'm not gonna use it there. And when the market made it to that same level here, did you realize that this is a previous swing high, and then you probably have this zone of sideways market. It's all the way from December all the way to January 13. It's literally 1 month of sideways market. Okay, these are previous. You could have go ahead and use your line in almost all of them. I don't like to fill the short with a lot of line, but you can do that exercise just for the purposes of training yourself. And then, oh man, sorry, we're gonna keep placing them like every time, just placing them. Here is one, and got one here, and probably one here. We're just gonna put them like, okay, and then we're gonna go back and try to analyze that together. So I have one here, and then I have one here. Okay, there you go. Previous high, that's a low. Okay, that's a high. That's a lot of line for a short. Definitely a lot of line for sure. Okay, there you go. That was a bear market, right? Okay, good. So you have this on the way up now. This line is pretty old, and we violated. We had some reaction over here, but it didn't hold too much, so definitely the supply was not enough to create a serious reaction. And then probably on the way down we have some small rally in the same zone. As a matter of fact, this was probably, yeah, there you go, this same line right there it was the top of a particular swing, very important swing on March 2019, and then it became the eventual floor after the bear market of 2014, and it was the top around 2019 rally. Important 2019 bull trend here. This top represent the floor, so we can say this is a very important resistance. I mean, support on the way down. It was a very important resistance on the way up. Now this zone of support did react because we had enough demand on this zone to react and eventually create a reversal. That's the reason why I told you they are not an indication to enter a trade. They give you some zone in which you can anticipate a reversal. You do not trade just using support and resistances. Remember, they are not here to create signal to buy or sell. Now, we got some very important swings. We're gonna keep placing them, but eventually, and for an example over here, this is probably one of the most important support you have, but you can definitely keep placing them. I don't like to put so much thing or too much drawings on my chart, but some very interesting swing. For an example, this one, that was a good one. So you had a swing. Remember, this was a previous swing low, because in the down movement here, we had a down movement here, and that's a low, and that's the lowest low of that particular movement. So this is called a swing low. Okay, and here we are the uptrend, temporary uptrend. Okay, remember this is this is supposed to be a bear market, and this is a bull, this is a bear market rally. So the bears was particularly powerful over there, but here we have an uptrend, and then this is a swing high, because that's a high here, one here, another high here, but that's the highest high of that particular move. So this is a swing high. Here we start having a bunch of lower lows and lower highs. We're still in daily time frame, and then that's a low, and that's another low, and this is a swing low. And then what happened is that these right there, okay, supposed to be this is probably on the way down, it was a support. React, we were expecting some reversal, it didn't happen, and then we go through it, we fall all the way down here. On the way up, nothing happened, and see that finally it reacts as a resistance. And the way down, this one got violated easily, but on the way up it did react, so we had enough supply for reaction. But after that, what happened is it didn't in the next test it failed to react. So we go through it and test the next resistance on the way up. Okay, and then on the way down, once again spent some time here, probably a small sideways market, and keep falling and keep falling. Spend some time on the support, maybe was dealing with some kind of demand, but eventually that same zone a fall. But when he made it there, we had a long sideways market, and sideways market can be extremely long and boring. It's literally more than 6 months of sideways market right there. But the most important point is that particular resistance end up being a serious support in that zone right there. Okay, so that's a way to see them. Remember, they are U-place lines, but generally they must be considered as zone. Okay, so you have a swing here. I'm gonna keep continue placing the swings. Nice one here, and then these are very important zone in which you can definitely place support and resistance. Now on the way up, you do after your trend study, you're gonna realize that this is an uptrend, and then what you're gonna do is on the way up, all those lines they become resistances. Now remember, you can go ahead, because this is a new trend, maybe you'll have to adjust this one a little bit here. The reason is they are not just line, they must be considered as zone. Okay, or you can literally place another one. The reason why I like to do that, and I often remove resistances, because generally they do not stay. Some of them stay for a very long period of time, and some of them, when they get violated too often, they fade. People stop believing them. But this is one in a movement, in an uptrend. You see this, you might need to place a resistance here, and it got violated. I mean, here react a little bit, but got violated right away. Let's say that we're just gonna put this one here. Now there's another one that's a swing, because it's higher. Just put this here. That's the reason why I tell you that you might need to correct them over times, just to make them more accurate. And this is a swing, important movement. That's another one on a zone of support, because we violate the resistance. Now it's a zone of support, and then here we violate it easily. And what happened on the way down? It stand as a strong support. Okay, now we got another. There's enough demand here, to launch another bull rally. Now here we got this top could have been considered as a support, as a resistance. This resistance have been established since 5 years. Now 4 years, this is a very interesting zone. So yes, it did react here, and then this support launched the bull rally again. We can consider this as a decent reaction, but the bulls, they keep increasing their bids higher and higher, and then eventually we got a break. When it gets violated here, we keep going up. Now we can keep placing those lines using every single important swings. We're not gonna use this because this is this swing right there was a resistance. This previous resistance, who turns into a support, was strong enough with enough demand to launch another bull rally and violate this. Now when you make it there, this is a swing that eventually pushed back, but this zone of support did react, and then same thing happened. We can keep doing that over and over and over. They are very important for us because we can just go ahead and keep placing them just using that. So real quick, okay, I'm just gonna keep placing them. Okay, now this is one right there, tops, here, line. Yeah, this is a zone of support, eventually broke down. Okay, this is a pretty recent one. Let's see. Yeah, you might need to sharpen this a little bit because the sideways market was somewhere over here. But here's what is interesting. This is a resistance that have been established since June 2017. This zone of resistance turned into a support, and then it reacts all the way down, like 2 years after. Now the older they are, the more important they are. Now there's a lot of line. That's a lot of lines in a short. You don't need to have all that line in your short. It's just I just wanted you to get used to the exercise of placing support and resistances. Now the other thing is, you can use round numbers, you can use emotional point, brutal, reversal, and you can use gaps. These are the most reliable giveaway from the market. When you see a gap, they are very rare actually. What? Okay. Okay, let's go there now. Okay, now we're gonna go all the way back where we're from, and then remember I'll talk about emotional point. These zones can be considered as emotional point. Zone of brutal move. See this zone right there. See this one? That's one of them. These are moves that are brutal, unexpected, and these create emotional point, and they tend to be very strong support and or resistances. Round numbers, like 10, 100, this kind of things. This is roughly around 100, and so on the way up, traders tend to stay away from buying round numbers. On the way down, they tend to stay away from selling round numbers, because they can usually be present in the market as supports and or resistances. This is for the statics type of support and resistances, and you see, look at that. This is an emotional point. These are emotional point because these are brutal change of direction in the market. This is one. We almost identify all of them. Pretty. This is sharp, Now we are in June 2019, and we had this brutal change of direction in December 2017. You can expect this to be a resistance on the way up here. Okay, now this was a serious support, and when it breaks down, we had a serious breakdown. On the way up, it didn't stand as a resistance. Now this break happened after a sideway. This is not an emotional point. This is very rare type of technical analysis in the market, because an emotional point is considered as a brutal change of direction. This is one, but not really. The type of emotional point that we're looking for are very sharp, like this one, and extremely brutal, like this one. This one over here, like this one over here, and and then let me check. Yeah, brutal changes that end up create emotional point in the market. These are brutal reversal. The word reversal is extremely important. For an example, on the way down, you had this brutal change of direction. It's like a drop followed by a rally in less than a month. This is one of them. Now this can be considered as this was already considered as a support zone, so there's absolutely nothing we have to say about this. Now let's go back on. I'll show you my card or something. No. Okay, so then we have what they call dynamic support and resistance. They tend to be, for example, trend lines, moving averages, Fibonacci's, retracement and extension. They also can be considered as dynamic support and resistances, but we're gonna have to go over them when we are gonna study those particular indicators. All right, I think we are at the end. That's the end of this lesson. Like I like to finish my lesson because I am upgrading my video posting style. So guys, I know that I'm not the only one who's here to give, so feel free to support this, to support a free share of information. Take care and bye.